Hey traders, this is Blake Morrow with Traders Summit, and I am excited to bring Helene Meisler back to the Traders Summit. She's a contributor, a Real Money Pro. Good to see you, Helene. It's been a long time.
Blake, how are you? Thanks for having me.
I'm doing great. You know what? You look fabulous, and you just look great. It's great to have you here, and you're that smiling face that I always love to have conversations with.
Well, thank you. It's always nice to chat with you as well.
Yeah, well, hey, this is a great time to be having this conversation or having a conversation about the markets. We're seeing the S&P, look a little wobbly. Actually, I'd just say markets in general looking a little wobbly. The dollar's been, kind of up against some pretty key resistance here. We've got a lot of central banks that have been meeting this week. The Fed just met yesterday. A lot of, I think we had, I want to say 1, 2, 3, 4. At least 5 G20 central banks that just met this morning, and more to come this week. It's very active in the markets, to say the least. But I wanted to get your opinions on where you feel the markets are at right now, generally speaking, because they've been pretty resilient as of late. Wouldn't you agree?
Yeah, in my view, too resilient. Well, I have been talking about the market. To me, a little history here. To me, got intermediate term oversold in the middle of July, overbought in the middle of July. And so I've been looking kind of in the middle of September for us to get an intermediate term oversold. Okay. And that's why I say they've been too resilient, because they're getting oversold, but the sentiment is still holding on. And to me, in order to get a good rally, I have to have oversold and negative sentiment, and I don't have the negative sentiment.
That's interesting. And one of the things,
and we don't have it because they're holding on.
Yeah, right. Okay. So one of the things I love talking to you specifically about these types of things is I know you follow sentiment so closely, and I know you have a bunch of charts that you want to show us too, but you follow sentiment closer than probably anybody I know in the markets, and I think that's why, that's not the only reason, but people love your technical prowess, but the way you put it all together. But you really take a lot of different readings on sentiment. So where are you seeing that the market is still so bullish at this point?
All right, let me maybe I should just
go ahead.
Go ahead and show you some charts here.
Please do. We'd love to see them.
Okay. This is an
and by the way, I don't see your chart just yet.
Uh-oh.
That's all right.
On.
No problem. We're good.
What did I do here?
It's all right.
It's this technology thing.
It happens. Technology does happen.
I got it.
There we go. And I'll tell you, I see right now, I see your screen. Yep, there we go. Now I see your S&P NYSE volume indicator.
Okay, so this is an indicator I use. It's up volume as a percentage of total volume on the New York Stock Exchange. And you can see it's getting pretty oversold. I'll assume that after today's action, it's going to be, kind of down here-ish.
Sure.
Even in the worst bear markets, this will bottom out somewhere around in the low 40s. I think once or twice in the height of the financial crisis, we got to like 38%. Wow. But it's currently at 45. So you can only imagine that we're getting oversold here.
Yeah.
Okay. But I want to stop for a minute and discuss volume. And this is where we go back to, I think people are holding on. If you think about, I know there's this old adage in the market that you want to see rallies on volume and declines on lighter volume. But that's not the reality. The reality is that volume tends to rise when stocks go down. And it tends to rise because fear of losing money is greater than fear of making money. Or fear of missing out, I guess I should say. So people rarely stampede into stocks. I think that's, kind of old time thinking, and it's not reality. And what we tend to see is volume tends to soar when we are going down. And as you can see, as up volume falls off the map, right? You can see there's your mid-July high. And then it's, up volume is just keeps coming down. Okay. So if we take a look at the New York Stock Exchange, with the exception of a rebalancing or the expiration last Friday, we have not had a day where we've traded over 4 billion shares in almost 2 months. That to me is not bullish, because volume is tailing off as we're coming down. Volume should be rising as we're coming down, because you want to shake people out, because it's a lot easier to rally once they've sold. And it's a lot harder to rally if they're still holding on. Okay, so that's what we want in terms of volume. And I'm going to...
Yeah, you want everybody hitting the bid all at once, and you want to see that
Right.
volume spike up as the market's coming off.
So I want you to take a look at the triple Qs. And I want you to see that we have not had one day over 75 million shares except in June. I mean, look at that. Basically since March. And you had that one day, and you can see because the volume is red that it was a sell day. That's what I mean. People panicking out, right? Oh my God, get me out. You haven't seen that. Look, you didn't even see it here in August. And so that's one thing that, in terms of, I call that a sentiment tell. We don't have it.
Sure.
I want to see, and if you take a look, and if you think I'm wrong, look at the March low. Okay? Then I want you to take a look at the fourth quarter of last year. Look at how many times you traded up over 75 million as you were getting sold. Okay, you didn't trade. I mean, you had this one day where you traded up on that gap up, but mostly people were selling. And selling on volume is more bullish than bearish. Okay? So
if you all are at home taking notes right now on what Helene's saying, is you should be looking at that resistance at 75 million on the triple Qs. If we start breaching that and the market's going down, that might be that indication that you might get a bounce.
Well, that you're getting what I term a whoosh. My whole column today was, where is that whoosh? And what do I consider a whoosh? And it's an elusive thing. I mean, it's not like I can give you a checklist as to what the whoosh is.
Right.
But one of the parameters would be high volume, panic out. Okay. I'll give you another thing that to me is bullish. And I know you're going to look at this chart and say, oh God, no, how can that be bullish? It's ugly. It's the home builders. Okay. But the home builders have been, back here. I don't know if you remember, back here in the fall of last year, it was all scary. Look at mortgage rates. Home builders are going to stink. You got to hate the homies. No one's ever buying a home again, right? Not at these rates. And then look what happened. People bought homes. Didn't matter what interest rates were. And they kept going up and they kept going up. And when did the narrative change? Oh, that's right. This summer, because the home buying season was good. And yet, once everybody changed the narrative to, the homies are okay, they're so good, people are buying houses anyway, it doesn't matter. And look what happened. They stopped going up and they built a little top. And that's not a giant top, just so we know. I mean, it's a top, but giant? No. I mean, it measures down to about here. Okay. But to go back to what we were talking about, people were holding on. Now they're giving way. That's bullish. Okay. You can't go back up until people have sold. They're finally selling. This is good. Okay. I'll give you another one. I didn't draw the line in. Look at the semis. Do you remember the whole AI extravaganza in May and June? NVIDIA was going to the moon. Everybody, I mean, I even tweeted at the time, it has that feeling of Qualcomm in late 1999, where you just have to own it. Oh my God, Qualcomm, it's going to 1,000. It's this. And look what's happened. the semis are exactly where they were then. Maybe you made a little bit extra money, but you haven't really gone anywhere. But again, they're hanging on. The semis are trying to break today. I would, again, view that as a positive. Now, the other thing I watch is the number of stocks making new lows. And it's not been increasing. I mean, you haven't even gotten a spike. Remember that March low in the Qs we just looked at. Look at how the new lows spiked. That was, again, we got some fear and panic in the market. Nobody's in today. I made a little mark where we are now. At least now you're getting a little fear and panic. Here's my other issue. I'm not big on the AAII, American Association of Individual Investors survey, but it happens to be saying almost the same thing that Investors Intelligence is saying, and I do like Investors Intelligence. And you can see this week, finally, at least you tick down. But where are you? You're like fraction over where you were in August when people really were kind of panicky. And so I would like to see the bulls come down. I mean, you have I don't know, this week, you finally got more bears than bulls, and it's only by maybe 2 points. And you can see the bears haven't even spiked yet.
Now, this is is this an intelligence survey, or no, this isn't the newsletter? Is it?
The Investors Intelligence's newsletter surveys. This is like anybody who's a member of AAII can just go in and click.
I see.
So that's why I don't like this survey.
I got it. But still, it's worth noting. It's like you're like getting this puzzle, and you're putting together all these little pieces to come up with your conclusion in the market, which we're going to get to. That's why everybody needs to stick around for this end of this video. But continue on, Helene.
And then there is what's a name, which is the National Association of Active Investment Managers. And each week they put out what they call their exposure index. And it goes out on Wednesday morning. Unfortunately, it has to be back into their members by noon. So, and we know what happened after noon yesterday. So you can see there's not been much movement. It's sitting around 54. But you look at how panicky they got in August. Okay, look at in March, they got a little panicky. Okay, and you can see what happened last fall. I would like to see this fall. I would like to at least see a number with a 40 handle. And we just haven't gotten it. So that's what I mean when I say to me, it's frustrating because I've got the setup to get some panic. And I think maybe today is the start of it.
Yeah. Okay. So your conclusion, and help me and correct me if I'm wrong here. Your conclusion is the market's bearish and you're seeing a move down. You want to be a buyer, but you haven't seen the market shake out enough people, enough bulls. And we haven't seen the volume behind it to really want to step in just yet to be long risk assets.
Correct.
So
what I'm looking for is that point in time where I'm oversold enough and sentiment is bearish enough. And I think I've got the oversold enough, but I don't think I have the bearish enough. And so I'm showing you the signs that I think get us to the bearish enough.
Yeah, because Helene, and I'd love to hear your opinion here. Oversold can always become more oversold.
Yes, but oversold with a lot of bearishness tends not to get that way.
There you go. And so we may be oversold, but we can become more oversold. But investors right now are not bearish enough to take action at that point. At this point,
no, but today is a good start.
Okay, today is a good start. That sounds good.
Today is a good start because I mean, for example, I haven't looked in the last half an hour, but when I last looked, 85% of the volume is on the downside today.
Yeah.
And that's some selling.
That is some selling. And maybe you know, and you know how the markets work. It's like you get in towards the end of the week, which we are, and then if we're still at these same levels going into tomorrow, maybe you get that everybody throws their hands up in the air and says, "Oh, look, I don't want to be long into this weekend. How about if the government shutdown news cycle gets a little bit worse over the weekend? Screw it, just get me out." And maybe that's where you start to get that volume coming in, and it could even set up for a bullish next week, right?
Well, one would hope that we can get there. Yes.
All right. You know, I love
that's sort of been my theme. I'm just looking for the indicators to get there rather than piling on the bearish side. To me, the time to be bearish was back in mid-July when everything was still rallying and you could still sell. Now I feel like you're starting to sell into the hole.
Right. Okay. So, Helene, I know this is going to be a little bit of bonus for people at home, and I'm going to take the screen here in a second because we had a conversation just before we hit record. And I want to say before I even get there, if you have any comments for Helene, jump in the comments down below. If you like what she's bringing you, give her a big thumbs up. Subscribe to this channel so you don't miss any of our exclusive content here at Traders Summit. But you and I were having a discussion about the dollar. And it's funny, we were talking about what a key level it is. And I'll show the dollar index so everybody can see what we're discussing here. We were talking about the dollar index and how important this level was at the 106, basically 106 resistance. And we were discussing what a key fib retracement it is, and you can see that we're at a 38% retracement on a Fibonacci retracement scale. And you were like, well, just 2 months ago, everybody was talking about the death of the dollar. It's going to be replaced. But in all actuality, 2 months ago was the time that you wanted to be long the dollar. 2 months ago would have been the time you wanted to be short equities, interestingly enough. So looking at the dollar index, what are your thoughts as we're at this key level of resistance?
Okay, I don't know if you can see my arrow, which you probably can't.
I can't, but I can move mine. So
okay, right there, that resistance that we're talking about around 106. Extend that line all the way out to the left side of the chart. And you're going to see that it's not just what we're seeing here, since October of last year, I guess, or
yeah, well, this is March.
But you can see that that's been a big level because you cracked over it in the summer of last year. You came back, you tested it, and then you had a big run. And then you can see once you've come down under it, it's been resistance the whole time. So it's a big level. Okay, we all know that. I think sentiment is a little too bullish, but before we get to that, let me point out that low in July was also when my indicators got intermediate term overbought in the market. Okay, so it's pretty clear to me that the dollar and stocks are very related. I know bonds too, but the dollar and stocks have been quite correlated.
Sure.
And I think people are too bullish on the dollar. But until the dollar index breaks 104.50, and if you want to blow that up, I'll show you why. Just if you blow up like the last month, that spike a week ago Thursday, that blue that you have there on the chart, right there. Yep. Okay. That spike, the low was roughly 104.50. Let's call it 104.50. Okay. And we had a big pop. The DSI, the daily sentiment indicator, got over 90. And then we drifted down and we couldn't break it. And then you can see yesterday or today, we got down to that level again and bounced. And now we're struggling to get back over it, back over the high from last week. So to me, right now, you're just sort of trapped in there. But I think you break 104.50 and you probably start to run some stops, or call it roughly 104.50, because you'll get a lower low and you'll break support.
That makes a lot of sense. And you know, it's interesting. I don't have it here, and I'm not an Elliott wave person. But a lot of Elliotticians are saying that, you know, one more spike above highs would complete their wave counts. And you know, we could clearly see yesterday's lows, and this is an end of day chart, the EOD dollar index. Yesterday's lows was 104.50. That was post FOMC. So if you are bullish the dollar, you don't want to see below there. But the flip side is, while we're above it, you know, you got to be respectful, I guess, of of how strong the dollar's been, right?
Right. Except that it's not been particularly brilliant today.
Right.
In other words, it keeps spiking up there and having no follow through.
That's right. That's right. You know, Helene, I'll tell you, you said something a little bit ago, and I have to compliment you on it, and also make sure that I emphasize it. These markets are all interconnected. It's interesting, and you know, even when I started trading in the mid 90s, I didn't care so much as I was trading equities. I didn't care so much what the dollar was doing or what the bond market was doing, and you know, you had very limited access to data. You know, when you know, whether you're using a Quotron or whether you used to print out your charts, which you still do, which I love, by the way. But nowadays, with information so readily available, and it's such a global market, everything is connected. So when you look at the dollar, you look at bonds, and you look at the stock market, everybody's looking at everybody else and seeing what everybody else is doing before they make a move. So I'm glad that you pointed it out, because it is such a big part of the markets that we trade today.
So. Well, yeah, I think it's probably always been, but now it seems that stock people know that there's a dollar in bonds. Stock people usually only know that there are stocks,
right? So let me ask you this before I let you go. And for those of you that don't follow Helene's work, you have to follow her on Twitter. She'll give you her Twitter handle, and follow her on Real Money Pro. She's a veteran of these markets, been around, you know, longer than most of us, and has experienced it all. So Helene, you know, I came from the school of thought that these bond traders and bond vigilantes, you know, it's kind of like they always know something before everybody else. We're seeing yields just absolutely fly globally, and you're seeing the bond markets really come under pressure. What does that tell you, if anything?
Well, I'll tell you, I'm no economist, so I'm not going to comment on interest rates. But I am going to tell you that the sentiment between June and now has changed drastically, in that in June, nobody was talking about, oh, just own treasuries. They were talking about just own treasuries at the lows in October last year. But in June, nobody was talking about just own treasuries. And now it's like people are just beating their chest the same way. Hey, I own NVIDIA back in June. Now they're all like, I own treasuries. Like, you know, like you can almost imagine going to a cocktail party, and instead of everybody talking about I own NVIDIA, I own 1-year bills, you know. And so I feel like the sentiment is getting a little bit there. Now, my thesis for the last year and a half, I guess, has been that as long as interest rates are high, or at least not 2%, the stock market in general is going to be in a very wide trading range. Call it 20 to 30%. Yeah. And I think every time you get up towards the top of the range, you're going to come back down. And every time you get towards the bottom of the range, you're going to find a reason to like the market, and it goes back up. And if you go back in the 70s, we made a big low in the stock market in December of 1974. We had a huge rally into the middle of 75. And then we kind of went sideways for years.
Yeah, all the way into the 80s.
Right. And if you go back, and oftentimes the pushback I get on that is, but we didn't have technology and we didn't have NASDAQ. Okay, so I'll give you 1987 to 1995, I think it is, in NASDAQ. It was like a 35% trading range. Boom, 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 boom. I mean, so we have a history in markets of doing that, wide trading ranges, especially when interest rates are not zero. And so I think one of the things that a lot of people who quote unquote grew up in the market in the post great financial crisis, they all think interest rates at 2% is normal, and it really isn't. And so I think what's happening is we're seeing a shift where people are getting used to, hey, I can park my money in cash. There really is an alternative. And so I think a lot of the no volume in the market is because people are parking their money in cash.
They have options.
They have options.
They
And
haven't
it's
had
something
options.
that a lot of people, if you got in the market and you were, got in the markets, let's say in 2010, I mean, you don't even know that. It's like not even, that wasn't even an alternative view for the last 12 years.
That's right.
And so it takes a while for these things to work into the market.
So it's been, I don't know, I want to say it's probably been about 17 years since I bought a certificate of deposit. When are we going to start doing that again?
Oh, my mother is buying them.
There we go. It's about that time.
I just commented. It's funny. I just commented to my husband. His father, may he rest in peace, who passed away about 18 months ago, just as interest rates were rising. His favorite thing was going to the bank to see what CD rates were. And then, of course, for the last 10 years of his life, he wasn't getting anything. And I just commented to my husband the other day. I said, God, your father would have just loved the CD rates.
Oh my gosh. Would you ever? Well, well, tell Mr. Morrison, I can't wait to catch up with him sometime soon on the Trader Summit as well. But Helene, I want to say you're such a saint, and you are just such a gem in the financial markets. Your experience, your knowledge, your prowess, it really can't be matched. So I want to thank you so much for spending your time with us here on the Trader Summit. What's the best way for traders to follow your work specifically?
Well, they can find me at realmoney.com, or they can find me on Twitter at HMeisler, HMeisler.
And I'm gonna say, Helene, you run some of the best polls out there in the business. If you see some polls that she runs during on Twitter, throughout the course of the week, make sure you vote. She gets a great read on sentiment and tells you what she found. So Helene, thank you so much for spending your time here with us on Trader Summit. I really do appreciate it. And I know everybody else will be giving you a big thumbs up for doing so. I look forward to catching up with you, hopefully by the end of the year. And so I can see if your sentiment has changed at all in the markets.
Thanks, Blake. Thanks for having me.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.